Tesla stock is down 8% after its much anticipated self-driving robotaxi event titled We Robot. And since announcing this event in the spring, the stock has surged significantly in anticipation of the event. However, it seems like stock market analysts are a little bearish on the news. Are they right? We'll dive into it. In today's video, I'm going to explain the positives and negatives of the event, ultimately doing a full updated stock analysis on Tesla. And finally, I'll explain why Tesla is my largest individual stock holding. Now, normally on this channel, I talk about dividend stocks, and my largest portfolio is my dividend growth stock portfolio. I update that every single month on the channel. As I just explained in my most recent portfolio update video, Tesla is actually my largest individual stock across my 3 investment accounts. And this surprised many of you as I normally invest in high cash flow dividend growth stocks. Those are typically more mature companies with clearly defined business models, and thus you can more easily value them as they have predictable cash flows that you can forecast into the future. However, Tesla does not fit that description. If anything, they are the world's largest startup. They have become highly profitable and free cash flow positive, which is great. However, this is a company that is continually investing into the future, so much so that current $700 billion valuation comes from many businesses which are not currently in the market and cash generative. And this brings up the largest risk about investing into Tesla stock. That is the timing and size of the future cash flows Tesla will generate. And in my opinion, it is the timing reason for why Tesla stock fell after the event news. With that said, let's roll the intro video and dive into this stock analysis. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Please sign up for dividenddata.com so you can use the stock research tool I've been showing throughout the video. Also sign up for my free email newsletter so that you can get great stock analysis straight to your inbox. Let's dive into the video. So first, let's talk about the event. I think one of the reasons for this being labeled as a disappointment among investors is because this was not an investor-focused event. They were very light on the details of how the Tesla taxi network will actually work. There was no demo of the app and how that will work for regular people. There was no specific launch date around that. There was no real world demo of how this will look for a normal person. There was no profit split amount for the percentage that Tesla will get from rides on their taxi network. And there was no specific price announcements around the cost of using that taxi network and how much Tesla would end up making from it. So for investors, it was very light on the details if you wanted to do the math and do your discounted cash flow analysis. And I think that's a big reason why the stock is down right now. That said, the event was objectively very cool. It was clearly meant to be a product spectacle and not an investor event. It was a showcase of what a self-driving future will look like. They were able to reserve the Warner Bros. Lot and basically built out this whole sci-fi set, almost like a theme park. And they had 20 to 40 of their robotaxi vehicles running throughout the whole set. And they allowed the attendees to use the robotaxis to go to these different locations they had built out. And first off, the robotaxi looks so much cooler than I thought it would be. They took that same design theme from the Cybertruck, but it looks so much better in this vehicle. Other highlights is that there is no steering wheel, no pedals. It will start production sometime in 2026 and likely towards the end of that because Elon specified before 2027. And they're planning to sell it for under $30,000 and anyone can buy it. In fact, you can buy and operate an entire fleet of these Tesla robotaxis and you can basically have your own taxi business. And I think that will be very interesting. The other notable design feature with the robotaxi is that it does not have a plug and it will instead charge wirelessly through an inductive charging. And this will allow less human interaction and charging and all of that. And it can just automatically do all of this. Less human oversight. And the other self-driving specific vehicle they announced was a robo van, which can hold up to 20 people. And it's designed kind of like that Art Deco kind of train thing, which is pretty cool. However, this definitely looks to be much more of a concept vehicle, and they didn't even bother to announce any production schedule with this yet. So in terms of investing, I wouldn't even factor this in until at least 2030. So this robo-taxi future looks really cool, and it's definitely where we're going long term. You can't argue about it. It's going to be much cheaper than any other taxi service where it's driven by a human. You don't have to pay the human. It's going to be much, much safer than human driving. It already is safer than human driving. But the biggest piece of news for Tesla stock is when unsupervised self-driving will be available. Unsupervised meaning that you could fall asleep or just be on your phone and chill and not even have to drive at all. And what they said about that is that for all Tesla cars, they plan to launch unsupervised self-driving in Texas and California in 2025. And those locations will increase significantly pending it goes well and additional regulatory approval in all these various regions. But in my opinion, for the first 5 years, this is going to be a US only service. So what that means is in 2025, they have the potential to slowly start rolling out their Tesla robotaxi network. It initially will have Tesla Model 3s and Ys since that's their high production vehicles. They will be the ones on the taxi network initially, because robotaxi won't even be in production until 2026 and won't ramp up till high volume till likely 27, 28. But again, the main problem with this event is that they were very light on the details that would matter for investors. The product vision is undeniably cool, and I think they will hit it. Maybe not in the exact year they say, but it will definitely happen. And when you're analyzing Tesla stock, you have to price in the fact that by 2030, they're going to probably have the largest self-driving taxi network in the United States. And it will likely be a very high margin business model relative to Uber and Lyft. And what do you know, after this event, Uber stock is up nearly 10%. Lyft stock is up nearly 10%. Now, I think the reason for that is people were shorting it prior to the event. And short term, it seems like Uber will be fine for a number of years. However, if you watched that Tesla event and you think that Uber and Lyft are going to be long-term winners relative to Tesla in that category, I don't know what you were watching. Once Tesla's self-driving taxi network is at scale, I personally would never choose to use Uber or Lyft. Tesla will be cheaper, safer, more private. I don't get why you would choose another option. The other big product shown during this event was their Optimus humanoid robot. And it's clear that they're making a lot of progress on it. They basically had 30 or 50 of them and they just set them loose. They had some serving drinks and communicating with the people at the event. And they had other ones that you could just go up to and talk to and mess around with. And this was the first time I've seen where they had the ChatGPT voice type thing, likely using Grok AI. And it did make it seem like more of a human experience you could interact with. However, there were not really any specific details around that right now. So from an investment point of view, you can assume that's many years away from reaching any sort of notable launch. And I would say it's probably a decade away from hitting a scale where it's a large percentage of Tesla's revenue. But I think it's pretty undeniable that it will be a gigantic product category over the long term. And we'll talk a little more about that later. But first, let's just go into Tesla stock being down around 8% after the news. I love the stock decline, personally. I've been invested in Tesla for a while, and it is a long-term position of mine. I think the company still has decades of high growth ahead, and I've been very disciplined about adding to my Tesla position at attractive prices. My average cost per share is $97.06. And if this starts a downtrend of Tesla stock back into the mid to high $100 range, then I would be really into that. So first, I'll just do a brief stock analysis on what Tesla stock has done in recent years, but then I'll come back to that long-term vision of where I think Tesla stock can go over 10 years. So Tesla, ticker symbol TSLA, is currently priced at $219.43. Over the trailing 12 months, they had earnings per share of $3.56, which gives it a 61 PE ratio. Market cap is $701 billion. And here you can see how Tesla stock boomed from 2019 all the way through 2021. And it got priced at pretty outrageous levels at that time. And then it has sold off significantly since then due to many different factors that I won't go into today. But in that time, I was able to add to my Tesla position at very attractive prices, in my opinion, during January 2023, after Elon had to sell some stock to buy Twitter, and again in early 2024. And what you'll notice about analyzing Tesla stock is that the price has basically followed their earnings per share. After the launch of their high volume vehicles, Model 3 and Model Y, revenue and earnings exploded. However, since late 2023, when interest rates rised and cost of living increased, it became harder and harder to sell cars in this economic environment. And the reason for that is most people can afford their cars based on car payments, which is impacted by the interest rate. So higher rates means higher car payments. However, Tesla However, Tesla focused on continuing to sell high volumes, so they ended up reducing prices on many of their vehicles, lowering that profit margin in the past year and a half. And the reason why they chose to do that is because they want as many vehicles out there as possible, because then they can capture more and more miles driven, which helps them train their self-driving AI. And by the way, in my opinion, they have a massive competitive advantage in that. If you don't think that, I personally don't think you know what you're talking about, but that's okay. So here you can see their revenue per share grow over time. The 10-year compound annual growth rate of Tesla's revenue is 39.10%. However, this is slowing down, and in 2024, they're likely going to be flat in terms of revenue per share. And as I mentioned earlier, they are free cash flow positive since 2019. However, 2023 was down, and 2024 will likely also be weak. That said, the company has a very strong balance sheet with their shareholder equity up at $66.4 billion. Their current cash and short-term investments is at $31 billion, and they have been allocating more and more money towards treasury bills over the past few years since rates were attractive for that. They currently have $16 billion in short-term investments, which I think is mostly treasury bills. So that gives them a risk-free way just to compound their money a little bit behind the scenes. And they are in an extremely good position in terms of debt, and they have negative $18.5 billion in net debt. And you get to that number from their $12.52 billion of total debt. And when you compare their financial position compared to every single other car company, whether it's EV or legacy gas auto, it's not even close. Tesla is the only one that's remotely investable. And right now, in terms of Tesla's revenue, 85% comes from their automotive business. So when people say Tesla is a car company, they are right in that currently that is their number one product by revenue by far. However, if you analyze Tesla a little deeper, it's very clear that they're a technology company, and they apply that technology expertise to different categories and different products. For example, energy generation and storage is a very big business for them. And while the automotive business has stalled over the past year and a half, energy has continued to grow significantly, up 100% year over year. And specifically, their storage deployed is up 158% year over year. They also have a massive network of Tesla supercharger stations that grew 23% year over year. And if you're investing in Tesla stock and you only value it based on that electric car business, plus battery storage and solar, and the electric car charging network, then you would likely come to the conclusion that the stock is overvalued. You'd probably be right. Now, I do think over the long term, those will be high growth businesses for the company because those are all growing sectors. Electric cars will continue to increase as a share of new cars sold, and Tesla will continue to dominate that category in the United States. Battery storage and solar for home and industrial applications will continue to grow over the long term, and electric car charging will continue to grow. All three of those are high growth businesses for at least a decade. However, I don't think that gets you to a $700 billion market cap. Maybe Tesla could sustainably have a $400 or $300 billion market cap with just those businesses. But luckily, that's not all Tesla is doing. If you're investing in Tesla today, you have to believe in the self-driving taxi network. You have to believe in unsupervised full self-driving. And from a technology standpoint, I think it's very clear that Tesla will get there first at the largest scale and lowest cost. I think that is fairly obvious to me. The question really is how well they can monetize that. And that's where that remains to be seen and where Tesla was light on the details in this event. So you can try and estimate how big of a business that can be. And I have my own rough ideas, but that's a big uncertainty if you're analyzing Tesla stock. So I really have no way to intelligently put a number on this, but I think it's obvious that it's going to be a gigantic business for Tesla. I'm talking self-driving will be a bigger business than the entire electric car business for them. At least in terms of profitability, I don't know about revenue. And similar to that, I think the humanoid autonomous robots are going to be a gigantic business. That one is much further out and likely a decade from hitting any notable scale, but it's clearly where the future is going, and there's no company better positioned than Tesla to capitalize on it. They have expertise in manufacturing low cost at scale, and they have all the AI expertise from learning self-driving. It's clearly where the world is going. And Elon has said over the long term that he expects the humanoid robot business to be Tesla's biggest business. And I think he is right. The only question is time. If we're talking 20 years from now, I think it will be their biggest business by far. But that's really the major problem with analyzing Tesla stock is there's so much uncertainty around the timetables, how much money these things will make, when they will come out, and investors hate that uncertainty. So I do think over the short term, meaning next 6 months to year and a half, Tesla stock might not do that great. However, as these businesses become more and more clear and how they will be monetized, then I think Tesla stock is poised for massive growth over the long term. You really just have to take a step back and think of it in the big picture. Tesla is the world's largest startup. They are leading in and or creating massive markets. I mean, just think about what we're talking about. electric cars, battery storage, solar, electric car charging, self-driving cars, self-driving transportation networks, humanoid autonomous robots for home use and industrial use. And then just think about what's going to happen over 10, 20, 30, 40 years. All of those categories are going to grow massively. And who is the leader in those markets? Tesla. And in my opinion, in the most valuable categories being self-driving and humanoid robots, they have the biggest advantages. It's so obvious to me that 10, 20, 30, 40 years from now, Tesla will be so much larger than it is today. And a large part of my investing philosophy is when it's obvious, you go big. If I was around in the early 1900s or late 1800s and had the opportunity to invest in Standard Oil, you invest in Standard Oil. And I didn't want to make this like a 40-minute video because I really could do a deep dive about why I think Tesla has all these competitive advantages in very specific product categories. And I could get really deep into that, but I don't think this is the video for that exact analysis. But I will touch a little bit on self-driving. And to showcase some of these advantages, I'm going to play a clip of a board member of GM, which owns Cruise. That's their self-driving business. And in this clip, he gives his argument for why they're going to beat Tesla and why this event yesterday was a bad event. And personally, I find his answer to be laughable.
He is on the board, we should point out as well, of GM, not an unimportant competitor there. John, let's just start off and give me your reviews, given what I've stated, obviously, is your bio and what you're doing now in terms of the presentation yesterday. What did you think?
Well, I think, the vision of us getting 11 hours back a week is a great vision. And that's why people have been working on this problem for more than a decade, because Americans spend about 11 hours a week in their car, and you would get all that time back. That's almost a full day. It's a workday plus. And you get a bunch of safety benefits. I think in terms of the presentation last night, I think the headline for me was, hardware is easy, software is hard. It is relatively straightforward to put a prototype vehicle out and show the potential of hardware. But the software and the data gathering is really where the rubber meets the road in this challenge. And in this case, Waymo's got 22 million driverless miles. Cruise has 5 million driverless miles. And right now, Tesla has 0. And there's a lot of catch up to do. And I think that the lightness on the detail is obviously not only affecting Tesla stock, but as Phil pointed out, is helping Uber and Lyft, where I think some people were potentially shorting that and then covered their shorts this morning because they saw that Uber and Lyft weren't going to be under the pressure maybe that they thought they were.
It is comical to say that Cruise and Waymo have an advantage in miles driven and to pretend that there is this advantage in supervised versus unsupervised miles driven, like that is some massive difference. You know how many miles Tesla has driven with their full self-driving? As of last quarter, 1.6 billion miles. 1.6 billion. And they have fleets of millions of cars driving every single day collecting data. It's a joke to say that Cruise or Waymo are better at data collection and will have a better universal self-driving system because of it. This number will grow exponentially as the Tesla fleet increases. It will soon be 5 billion miles driven, 10 billion miles driven, 15 billion miles driven, 20, 50, 100. And by comparison to Tesla's current starting point and their growth trajectory, Waymo and Cruise might as well not even have started. It's so obvious that Tesla is going to wipe the floor with these competitors over the long term in terms of the scale of the business and the cost they'll be able to operate at. But again, I could go on about this for hours, but I'm just going to let the future play out and continue holding my Tesla stock. I think Tesla will continue to dominate the electric car market because they will be able to provide more affordable vehicles while being profitable. It's just obvious at this point. They're years ahead and have better manufacturing and cost. Rivian is basically at where Tesla was in 2017, and they're losing massive amounts of money. It will be years until they even get to a point where they're profitable, and they may go out of business before then, who knows. The legacy automakers, GM and Ford, they're in a terrible position. Their combustion vehicles are profitable and they make a lot of their money on parts, but their electric vehicles lose money, and for every electric vehicle they sell, they're not growing the market. They're swapping out a profitable car they sell for an unprofitable car. And it's for that reason you see companies like Toyota move very slowly into electric cars and focusing more on a hybrid approach. This is one of the most clear cases of the innovator's dilemma. In my opinion, over the next 20 years, the biggest car companies are going to be Tesla and BYD from China, and those will be the new market leaders. But the car business isn't even that good of a business. It's very high volume and high revenue, but the profit margins are much lower. The real bull case from Tesla stock comes from self-driving and the humanoid robots over the next decade. If you're going to invest in Tesla stock, you have to believe in those things. This is not a stock for a value investor. Think of this like you're investing in the world's biggest startup. That's really how you have to frame it. I'll likely add to my Tesla stock in the mid to high $100 range. The current consensus price target among Wall Street analysts is $248.66. So with the fall in stock price today, it's currently 13.47% undervalued. And with Tesla, due to all the risk around the company, I like to invest into it with a wide margin of safety. And thanks to Tesla's volatility, those opportunities come up every couple years. So let me know in the comments what you thought about this video, and I'll get back to my regular dividend stock and dividend growth stock news. Please leave a like, comment, and subscribe to the channel, and sign up for dividenddata.com if you want to use the stock research tool I've been showing throughout. Thanks for watching.